If a business owner listening has worked with somebody who has explored or is exploring the R&D tax credit on their behalf, if they're not asking really specific questions about how they do their work day in and day out, they're either missing out on more opportunity for them, or potentially they're maybe overextending this credit on behalf of business that could get them in trouble on the back end.
Hey guys, Todd Dawalt here from constructionleadingedge.com, and here's a disclaimer. You should only listen to this podcast. Let me put it this way. If you don't feel like you're paying enough in federal taxes, don't listen to this podcast, okay? If you want to pay more, if you want the government to be bigger, if you're opposed to getting a check back from the IRS for overpayments, don't listen to this podcast because it will frustrate you. On the other hand, if you would be interested in getting a check back from the IRS, like a lot of people are doing because they know about some tax credits that your CPA may not know about or may not be telling you about, then you should listen up. This is an interview with Justin Rupple that I did a little over a year ago. And since then, a lot of people are getting checks back from the federal government. I just spoke with one of our clients who's a builder in North Carolina a couple of weeks ago, and he said he has received payments back totaling around $30,000 from these tax credits from working with Justin Rupple. I talked with another client a little over a year ago, and her name was Tracy, and her exact words were, "Todd, we got back $70,000. They were a small business. So here's what you're going to learn about. Okay, if you are okay learning about potential ways to get checks back from the federal government for taxes you've overpaid legitimately, then here's what you're going to learn about in this podcast. Some little-known tax credits that are available to construction business owners, how much money is being left on the table every year by the average construction business, what does the process of recovering your overpayment look like? How does this process work? What's the first step? And what is this tax credit program? Why does it exist? And you may be wondering, why doesn't my CPA tell me about this? Or maybe you've even asked your CPA, like a lot of people have, and your CPA has said, you know what, you're not eligible for that, or it's not going to work for you. Why is that? We talk about that. So this episode could, no joke, no exaggeration, could help you get back tens of thousands of dollars of tax credits. I'm not talking about credits to go towards your future taxes. This could get you checks from the federal government for tens of thousands of dollars. So listen closely. If there's a chance that you could get money back, please contact Justin. This is an interview with Justin Rupple, who has helped people get back hundreds of thousands, if not millions of dollars from the federal government. And I got to tell you, I hear some of these stories, and very few things get me as excited as hearing people getting checks back from the federal government. This is legit. Okay, I spent months looking for someone like Justin to help you get money back from the federal government. So please listen closely. Please take the first step. Reach out to Justin. One of the things you'll hear about is you can go fill out a form if you're interested, and you can do that at constructionleadingedge.com/recover. If you know right now that, yes, you're interested in getting checks back from the federal government, hit pause, go to constructionleadingedge.com/recover, and Justin's team will reach out to you. Without further ado, let's jump into my conversation with Justin Rupple. Enjoy. All right, Justin, thanks for being on the podcast. So let's just jump right into this. This is an interesting topic. I had this hypothesis. I'll bet there's a way to recover overpayments for construction businesses, and that's exactly what you do. So let's talk about what are some of the tax credits, some of the overpayment recovery opportunities that are available to construction business owners. And then let's talk about things like how much money is being left on the table by the average construction business. And yeah, let's start with that. What What are some of the tax credits that are available to construction business owners that they probably don't know about?
Yes, you're right. First of all, I want to say thank you for having me on the podcast with you, Todd. I appreciate this opportunity. I have the great opportunity to share with business owners all the time, especially in the construction industry, about opportunities that they are unaware of, unfortunately, especially small to medium businesses. There are so many incentives, credits, rebates that they're underserved and often go overlooked. There's a few ones that come to mind. There's employer reimbursement programs, there's cost segregation studies that help accelerate the depreciation of their commercial building if they own one. There's energy efficient commercial buildings tax deduction if they make improvements to their own facilities to save energy. There's federal empowerment zone hiring credits. But one of the most significant ones where we see is grossly being overlooked and small businesses in the construction industry are largely being underserved is the research and development tax credit. This is one of the most valuable credits that is leveraged by companies all across America from all sizes to basically put money back in their pocket, to minimize their tax liability and to keep more of their hard-earned money in their pocket. Sadly, the Wall Street Journal estimates that about 5% of eligible small businesses are actually taking advantage of the R&D tax credit. So the vast majority of the money, they're estimating about 80% of the federal budget that invests in businesses engaging in research and development and innovation and creativity, custom projects, is going to large companies and large corporations. And so they're getting their piece. And so what I get to do is help educate business owners, small and medium businesses, of what they're missing out on, of the way the government is wanting to incentivize the incredible work they're doing day in and day out on every job and every project in their communities. They're building, constructing, designing, remarkable things that there's incentives for them, and they're missing out on it. So the R&D tax credit is a significant one. And so you ask about how much is being left on the table every year by construction businesses. Now there's a wide range of what that could look like. Every business is different in how they do their business, what activities they engage in, what aspects of the construction process they emphasize or focus on or specialize in. But I can just tell you on average for us, we see construction businesses with an average revenue somewhere around 5 to 8 million a year, let's say. They doing a 3-year look back because the IRS lets us go back up to 3 tax years retroactively. So we're not, there's past activities we can still engage that. There's potentially often about $100,000 or more being left on the table from these businesses. And so it's so common for us to look back and discover, wow, there's significant money that's being left on the table that if we don't engage this and we don't do the proper work to document and analyze these activities, that's a lot of money being missed out on, being left. So it's a significant opportunity.
Yeah, let's talk about what that means, what the R&D tax credit means. Research and development, it sounds like some people might be thinking, I don't do research and development. I don't have scientists on staff. I don't have researchers.
We picture lab coats and test tubes and beakers and whatnot.
Right.
When you think of R&D, and that certainly is. So it's not to dismiss that, but research and development, it is something that is much broader than what we typically think about. And so often I'll talk with a construction business owner, general contractor, and they're like, "How do I do R&D?" I'm not developing any new products, new technology, so to speak. And the answer is, well, in one sense, yes, you're not making a new pharmaceutical product that's revolutionary to the world. But you are developing new systems, new processes, new designs that didn't exist before. Even when you're being handed designs, architectural plans, you're having to develop the processes and systems to actually construct what's there on the paper. And through the process, there's always anomalies, things that change, things you have to, ways you have to pivot and come up with alternatives. And you're being tasked with having to do the work, the research and development to be able to come up with those alternatives and to figure out those problems. In fact, a lot of CPAs often don't even go after these credits on behalf of their businesses that they serve in the construction industry, because a lot of them have misinformation about this tax credit. The R&D tax credit is actually a very old tax credit. It's one of the oldest tax credits on the books. It goes back to 1981 under the Reagan administration when this was first designed. And there was a discovery rule calling on the research activities had to be new to the world. And so for many years, for a little over 20 years, it eliminated so many businesses that aren't building new revolutionary things entirely new to the world. But in 2003, that discovery rule was eliminated. So companies now can claim the credit for research activities that are only new to the company itself and the clients they serve. And for construction businesses, every project, there is aspects that are new. There are aspects that are creative. There's uncertainty as to how are we going to do this? How are we going to design this? How are we going to develop this system? How are we going to construct this structure? And the activities involved in developing that, designing that, and completing that. There's activities that the IRS calls qualified research activities, and those can be quantified and can be part of the process of calculating the R&D tax credit on behalf of a company.
So we mentioned a couple of misconceptions. One is that R&D requires software, pharmaceuticals, people walking around in goggles and Bunsen burners and white lab coats. The other is that there's a misconception that it has to be new to the world, which went away. Sounds like that was the case for 20 years, but has not been the case for the last 20 years. So there's some misunderstanding or misinformation out there on the part of CPAs. What are some of the other misconceptions that are out there about these tax credits?
One similar to the discovery rule is for a long time, only C Corps could take advantage of this. And so a lot of times small businesses think of I'm a sole proprietor. We're a partnership. We're an S Corp, LLC. You're thinking the big corporations, large publicly traded companies that are heavy doing R&D, and they certainly are taking advantage of this. So it does apply to them. But also a number of years ago, the IRS broadened it to be able to allow for all corporate types. All business types, even sole proprietors, could take advantage. So corporate structure is not a limiting factor. If you are engaging in these activities of custom design development, developing new things for this world or for your clients and for your business and new processes and new systems, there are activities you engage in that likely are qualified activities. So that's another common misconception, to where even CPAs may not even bring this up to their clients because they're not aware of the nuances and even recent changes in tax law.
So let's talk about some of these specific activities that may qualify. I'll just list a few. What if someone is investing in software for their business to make projects for scheduling, tracking information? Does that qualify?
There's aspects of that process that do. And that's part of when you're engaging with a specialty tax firm that specializes in this, they're going to ask the right comprehensive questions to get to what aspects of that are qualified activities. A lot of times business owners would think, well, that can't be because I didn't design the software. And while, yes, the software development company that used computer science to design the software, they're getting their R&D tax credit, you believe it. But the process of research and developing the proper systems to be able to implement that software in their context and utilizing that software to develop, whatever it is that their clients ask them to do, develop the plans and the processes to construct the facility they're asked to construct or whatever it might be. So that's where using systems like business information modeling and AutoCAD, example, the use of those systems to model what you're constructing or modeling a property or whatever it might be, that is, that part of that is qualified activities, even though we're not producing the software itself, but it's using software systems as an aid, a technological aid. Because part of the R&D tax credit is there's got to be some element of uncertainty. We don't know exactly how to do this from the front end. And so we've got to figure out, we're taking on risk. There's got to be a risk factor involved. We're taking on risk to figure out how to do what's being set before us. And we're using some types of scientific processes, whether it be physical science, computer science, engineering, to be able to experiment, to design and develop a solution to our problem. And construction companies at various levels are engaging in this every single day in their projects and in their work.
Here's a big question. Why does the R&D tax credit program exist? It would seem like the IRS is all about collecting tax, but
Uncle Sam's going to get his money, isn't he?
Yeah.
Yes. So it's a great question. When this goes back to 1981 and the Reagan administration, it was not that this still doesn't apply today, but a season where America was seeing large corporations shipping off jobs overseas to China and other places. and a way to curb that, a way to incentivize businesses to stay here, to develop businesses to produce, American-made products, and also to create jobs here in America. And so this is an incredible, tax saving opportunity to develop to incentivize that. Companies here in America are being incentivized for growing, creating jobs. At the end of the day, that is going to grow the tax base of America, and on the back end, in a sense, support the IRS in that way. And so they want to incentivize these activities because these are creating new developments and creating jobs here in America.
And it sounds like a lot of big businesses know about this. They're taking advantage of it.
Oh, yeah.
And it's just normal course of business. But that does not seem to be the case with small to medium-sized businesses.
You're absolutely right. I read something earlier that there's about a $12 billion annual federal budget that goes towards tax incentives towards businesses. And the vast majority of that is being taken out by large businesses, large corporations. And it's sad that small businesses, while they make up more of America, while they are the backbone of our country, locally engaging in, providing all the services that we need day in and day out, they're underserved. There are a handful of the largest tax firms in America that provide this to the large businesses that won't even return the phone call of the small business owner, who's not doing, at least $1 billion or so in revenue. And so the organization I'm able to work with, it's my pleasure to be able to serve small, medium business owners, because without the opportunity of having someone come alongside and say, let me educate you on opportunities that you might be missing out on. And not even just educating, but also let me help you explore this for free educationally. We can look into this and do an analysis so there's money on the table before committing to anything. Because these large organizations that provide this for large businesses, what they're charging will outprice any small businesses because they're charging even to explore it. So you're paying them even just to put in the hours to see even if it benefits you. Because the truth is, some businesses may not qualify. Some businesses may qualify, but their particular tax years, they didn't have any tax liability for any number of reasons. And you're only able to take advantage of the credit to the degree to which you're paying taxes. So your tax liability might, in particular tax year, you may not be able to benefit from the credit. And if that's true, firms like ours, well, then you don't pay us anything. We'll explore that. We'll let you know. You know what? Great. And so small businesses need to be given the opportunity to take advantage of these incentives. That's what they're there for. And I've seen messages even from senators, at small business conventions, sharing with small business owners, these credits are for you. Explore them, look into them, don't overlook them, because they know that they're not being served well.
So my next question is, it seems like the typical CPA doesn't know about or doesn't go after these credits. I've spoken with several of my clients and referred them to you, and some of them have said, I talked to my CPA about this and they just didn't seem really interested. So one of the reasons that they don't go after these tax credits is there could be some misinformation, but are there other reasons that small business owners need to be aware of that the typical CPA doesn't go after these tax credits?
Absolutely. First of all, there's a misunderstanding that our CPAs that are serving our businesses well are getting them every credit and deduction and incentive that's available to them. And that's simply impossible. CPAs are great at what they do. And I'm sure anyone listening, their CPA is probably doing them a wonderful job. They specialize in providing financial advice and services like accounting, financial statements, corporate structures, tax document preparation. And we need that, but they're generalists. I wouldn't, my general doctor might know enough about the human body to discover that I'm experiencing some kind of neurological problems, but I'm not going to trust him to do brain surgery, and they're specialists for reasons in so many different areas. And so even in tax, there are specialists that focus on different areas. And so no CPA can know it all. I recently met with a CPA and who serves small construction, general contractors, trades companies. And he shared with me, he's like, look, I'm almost embarrassed to admit I don't know that much about the R&D tax credit. He's like, I know that I could put in the time and energy to learn about it, to learn, how to do it and all of this. But I know that's not the best use of my time. Also, even to facilitate it for my clients, the amount of time it would take for every single client. And then I got to charge them hourly. There's something called Circular 230 which is a publication from the Department of the Treasury that governs how CPAs actually engage their clients and bill them, requiring CPAs to bill them in certain ways. And typically it's hourly for their services. And a CPA would have to bill for even just analyzing and investigating and exploring. And they know it's not in their client's best interest to go through that process, bill them for it. And they don't have the time to invest in it. And so, a good CPA knows that and will admit to say, this is not my area of expertise. And so engaging in a specialty tax firm that can come alongside as a complementary service, not to replace the CPA by any means, but to offer an added value of, hey, there's some other things that your CPA may not be able to facilitate or may not know enough about to even know why you qualify. But we can come alongside and we can explore this with you and help you take advantage of this opportunity as an added value to your CPA. And now we can partner with them.
Yeah, it makes perfect sense. It's not that the CPAs are hiding something or that they're negligent. They have their hands full keeping up with all of their clients with their basic scope of services. And this is really niche. This is not mainstream, but it's also not too good to be true. It quite frankly sounds too good to be true. There's probably some of you listening thinking, "Man, this is a scam. There's no way this works." But I can vouch because I referred one of my coaching clients to you a few weeks ago, and we were finishing up one of our calls, and I said, "Hey, how did that thing work out with Justin?" And he's like, "Oh yeah, I'm gonna get $20,000 back." He was pretty excited about that. So let's talk about some examples. What are some examples of construction businesses you've helped, and how much do they get back?
Great question. Like I said earlier, it all comes down to taxes paid, and you only get out what you put in. And so what we're able to do is provide that free analysis where we spend some time going through discovery process, asking the thorough questions of what you do day in out that qualifies you. And then our tax team reviews the past tax returns. Typically, it's going back 3 years. And we're able to estimate how much can be recovered on the front end, free, no obligation. And then if we want to move forward to do the full analysis and all the proper filings, then we get to the point where we know exactly how much we're recovering. And it scales in a lot of different directions, a lot of variables, but here's some examples. One on the high end, we worked with a large contracting firm, 150 plus employees. And doing this 3-year look back, we're able to get back for them $1.9 million in tax incentives and credits. I mean, that's a significant amount of money. Tax money they've left on the table without taking advantage of this tax credit. Another commercial construction company of about 50 employees found $262,000 in incentives. That's significant for this company. But then, it's not just on the large side. Even we worked with a small one-employee engineering company, and we're getting them $15,000 in tax incentives. I worked with a small landscaping contractor. We're getting about $20,000. There's a couple S corps construction companies. One getting $350,000, another one $900,000 in this 3-year look back. But a couple like really particular stories come to mind where this really impacted them, if you don't mind me sharing. One is a general contractor that specializes in hotel renovations. He goes through these big hotels and do 30 rooms blocks, works his way around the hotel, give an overhaul the whole hotel. Doing really well leading up to the pandemic, averaging around $5 to $7 million in revenue a year. Just has a few employees and contracts out the rest of the work. But when the pandemic hit, his business came to a screeching halt. He had a few jobs he was able to finish out over the coming few months, and then hotels stopped renovating. There's so much uncertainty about what's going on in this pandemic, and he's only beginning to get new projects coming here, starting in 2022. And so we engaged back around the holidays this last year and went through our process, and we discovered that we can get back from $172,000 in tax incentives and credits. I remember that phone call when I was able to call him and share with him the final analysis. And this business, he's practically in tears, just like, Justin, you don't understand what this means to me. We have been burning cash this last year and a half, just trying to stay afloat, taking on every job we get our hands on, even the smallest home remodel. We had to pivot and do so much, and we're just barely seeing the light coming up on the horizon. oh man, this is such a big deal for us right now. And so it's so wonderful to be able to have those conversations. Another commercial and residential plumbing service company, they had just finished a grueling process of a just an awful lawsuit. Can't get into the details, but a past employee, and there was some problems with that employee's mental health, different things like that, and it resulted in a lawsuit. It ended up working itself out for them, but it just diverted so much time and energy and money to get through that, and what it cost them. We went through this process, and we're recovering $123,000 for them. That was back in the fall. They're actually starting now to get their checks because the process can take a little while for the IRS to process these and then actually submit refunds. And that's the part that's out of our hands. They're slow, but it's real. And this is real cash getting back in their pocket that gives them that boost, that hope, that infusion that they need in a really hard season they're walking through. So it's a real gift to be able to support small business owners in this way.
Yeah, what a great job. I get to work with construction business owners to help them put systems and processes in place. But I envy you because you get to help people get checks back from the federal government. I can only imagine what it feels like. It's one thing to get, my tax refund check. I gave the government an interest-free loan this year, but to get a check, a six-figure check back from the federal government and open that up, especially having gone through the pandemic. And yeah. So that's fantastic. So give us a quick synopsis of, there are probably people listening thinking, I'm not sure if I qualify for this. Is this right for me? So who would be a good fit for this? And then give us some indicators of who might not be a good fit for this.
All right. Yeah. Great question. The process for business owners is relatively simple. It's a complex process of doing R&D tax credit study. And so we shoulder the complexities of that and try to make it as simple as possible. Small business owners are busy. They're carrying a lot on their shoulders, and we want to take on as much as we can. But our first step of the process is qualifying. We have usually when I'm engaging with business owners, we have an initial conversation, ask some basic qualifying questions. First of all, is annual revenue. Not that there's a magic number, but we've seen just kind of a typical threshold of usually around $750,000, $750,000 in revenue is kind of the hump where this tax credit becomes beneficial. And it's not to say a business doing, $300,000, $400,000, $500,000 doesn't have qualifying activities, things that they do in the process that actually could qualify for the tax credit. But we found that typically because of, if their CPA is doing them a great job with deductions and write-offs, usually their tax liabilities on the smaller side, that going through the process is probably not necessarily going to be worth their time. Another thing is if the service that they offer is very cookie cutter in the sense of they show up and do the same service in every job. There's no uncertainty, there's no design, there's no customization to it. There's times I meet, I'm referred, I connect with the business owners, we talk through what they do. So, I don't really see any R&D activities here. Now, just because you're not thinking of doing R&D activities, don't write yourself out. In fact, I read an article in Entrepreneur magazine recently, and they cite it as the biggest reason why small businesses miss out on this tax credit is self-censorship, is what they described it. Meaning they opt out before ever exploring. So I don't encourage you to do that. It's worth a conversation, but there has to be some level of customization and design involved in the process. And even with the construction business, why they may not be heavy on the design side, every business is going to be different in the way they do that process. There's still aspects of design development. So the typical construction company, general contractor, even subcontractors and trades, engineering, architecture, there's a lot of qualifying activities that make it worth exploring. And so our first step is qualifying. We have a thorough discovery questionnaire we go through with every business. It takes about an hour and a half of their time, where we're asking them a lot of questions. Basically, I sit with the business owner, I pick their brains for an hour, getting into the nitty gritty of what they do day in and day out on every job to help identify what are the particular qualifying activities. And this is very important. If a business owner listening has worked with somebody who has explored or is exploring the R&D tax credit on their behalf, if they're not asking really specific questions about how they do their work day in and day out, they're either missing out on more opportunity for them, or potentially they're maybe over extending this credit on behalf of business that could get them in trouble on the back end. You got to get into the particularity of the activities of a business, and we do that. And if we go through that process only about an hour, and we discover that there's not enough activities here that would make this tax credit be something that we believe we can substantiate, then we let them know that. And it's really, there's no money wasted and very little time spent. But if yes, there's qualifying activities, then our tax team reviews past tax returns to quantify. So we qualify and then we quantify, reviewing those eligible returns, typically the last 3 years, to identify the qualified research expenses, which include wages, supplies spent on those activities, and even payments to contractors. It doesn't have to just be employee labor costs. They allow us to not just take that, but also 65% of payments to contractors can go towards the calculations of R&D tax credit. And so we quantify that. And then we work to substantiate. And so we develop the necessary R&D project documents to substantiate the claim. Because one of the biggest reasons also that businesses don't take advantage is they're not keeping the records to be able to substantiate the R&D tax credit. And thankfully, the IRS has detailed how small businesses can do it. And so we help develop those records on their behalf by taking the information gleaned from our discovery process and the financial figures on their tax documents. And if we need more, we'll reach out to get those together. And we develop those documents on their behalf. So we know that this will pass scrutiny. This will pass the test, that if this gets reviewed, we have what's needed to substantiate the claim. And we won't file any claim unless we know it can be substantiated. So that's our process: qualify, quantify, substantiate, and then the checks come. And it's a great thing, as you said, to get that check. It's wow. We left money on the table and we didn't even know it.
Yeah. So it sounds like the people who probably don't qualify for this, if they haven't paid taxes,
Mm-hmm.
if they haven't completed a tax year, if they don't have tax returns, they're a new business, let's say in the first year, and you haven't filed a tax return yet,
Right.
then probably don't qualify. Sounds like if you're under $750,000, I think was the number in revenue, maybe so, but there may not be enough there to justify the effort. May not be enough for you. Any other disqualifiers?
Nothing in particular comes to mind. Every company's different. And so, getting into the nuances of every company and how they do their work, there are times where there's not enough qualified activity to substantiate it. There's times where there's not enough tax liability to substantiate claiming the credit. There's times with larger companies over 50 million in revenue and more. There's thresholds that are different of how much ratios of qualified research expenses to other labor costs. There's a lot of complications to that, and that's why analysis is needed. And so that's why if a company is involved in the construction process at any level, and any aspect of that, it's worth exploring. If you're around that $750,000 market, but I would even say if a company is a little below that, but they're paying substantial taxes, it's worth at least exploring. They at least have one employee. Like I said, corporate structure is not an issue. It's something that is worth exploring to see if there's money on the table.
Fantastic. So if people listening want to explore that, they want to recover the tax credits they're due, what we've done is I've set up a page where you can go set up a link. You can go to constructionleadingedge.com/recover. It's RECOVER, constructionleadingedge.com/recover. You'll find out some more information. You can take the next step, get in touch with Justin, schedule a call. It sounds like the first step, well, just describe once they go to that page and they get in touch with you, and once they get in contact with you, what's the first step? Is it will they send you some information? Will they schedule a call? What are the first couple of steps there?
Yeah, great question. So my first I have a conversation because every company is different. Understanding their unique history, their unique tax structure, where they find themselves essentially. And so that first conversation, usually it's about 10, 15 minutes, making sure they're understanding what this tax credit is and understanding their unique corporate structure. Some are really simple, others are more complex, where it's an S corp with two shareholders, or one of the shareholders is another S corp. Different things like that. That some might think, well, this is too complicated. No, we can navigate all of that. But having that first conversations helps us set up a simple game plan. Okay, so we're going to focus on this corporate entity if there's multiple. And so once we kind of have that set, that's kind of some of our initial qualifying questions and conversation. And then if it makes sense to move forward, we plan a 1 hour discovery call. And that discovery meeting is where we sit down and usually over Zoom, because you're not limited by geographical region. If you pay to the IRS, you're eligible. We go through our 43 question questionnaire, and we ask you all the questions to identify your qualified research activities, what you do in the particular ways you do it, and the particular jobs that you do. And then from there, we request you to upload to a secure Dropbox the applicable tax returns, and which is typically the last 3 tax years. And that all goes to our tax team, and they take about a week or two to review all of that we've submitted, to be able to report back our incentive analysis with no cost, no obligation, as a piece of education of like, hey, here's what qualifies you, and here's what our estimation of how much money we can recover on your behalf if you'd like to move forward. And then we talk about what that looked like if it's something that a business owner believes it's worth going after.
Perfect. Yeah. So go to constructionleadingedge.com/recover. And one other important point, we've been talking about construction business owners, but if you own a different business or you know people who own other businesses, there are R&D tax credits available for lots of other industries. So what are some of the other industries that are similar to construction in that they're leaving a lot of money on the table?
Yeah, great question. We work with a lot of businesses in the construction industry and construction related businesses, but there are many others. Businesses involved in manufacturing at different levels, manufacturing processes and procedures that are designed to manufacture a product, regardless of whether it's agricultural industry. There's R&D that goes into whether it be farming, livestock, but also the processing of food and meat, all that kind of stuff. Medical industry, whether it be medical devices or pharmaceuticals, but also the hands-on side of doctors, dentists, chiropractors. They're doing similar work, not on a building, but on the human body, and having to do research and development of custom treatments, utilizing technologies to serve their patients, and they're each one having their own unique problems, or whatever it is that they're having to engage. Those are some of the most common industries that we work with, but there's various others. But it's a great question. Just because a business is not construction related doesn't mean that this doesn't apply to them. It's always worth exploring.
Yeah,
What else might be available?
This might be a good way to build a relationship with a client. If you work with doctors, chiropractors, somebody in the manufacturing space, then this would be a great thing to refer to them as well.
So think about a business owner who's investing in developing a facility. There's aspects for them and what they're engaging in, ways that they're employing you to develop something that will better suit them to do whatever they do. There are ways that can help be part of what qualifies them. For example, if you don't mind me sharing, I'm working with a manufacturer in Southern California. They're called ArcLight, and they have developed an incredibly creative product called Smart Gravel, where they are melting down plastics that can't be recycled in the normal recycle process and creating an alternative to gravel for construction businesses. And so they are taking the knowledge of the R&D tax credit to their potential clients, which are construction businesses, to share with them your investment and experimentation with our product is itself a qualifying activity for the R&D tax credit if you're not already taking advantage of it. That and probably many other things you do. And so it's something that to be equipped with this knowledge to share with others in your potential clients, that there could be money that they're leaving on the table for what they're doing. And then you become the partner that really helped them discover cash they left on the table. And now you're the hero, So it's a great opportunity to share with others.
Yeah, it's one thing to be a great service provider, to be the easy button that takes care of the problems, but when you help them have that experience of opening a check from the IRS and they get money back, that can only help the relationship. If you want people to know you, like you, and trust you, then I can't think of a better way to do that than help them get checks back from the IRS. Yeah.
I tell you, nothing builds trust more than that sense that you actually care about my well-being. You're not just in it for you, that you actually want to see me succeed. And even a construction business that's not just trying to get a job, but actually cares about their client and what they're trying to do. And this is another way to help do that. And so it's significant, and it's a great opportunity to share.
Yeah. Fantastic. Well, Justin, thanks so much. Again, folks, head over to constructionleadingedge.com/recover and reach out to Justin and get this process started. This should be a movement. Let's recover the money that's been.
I don't want to see a single business leaving money on the table. I want them to get every dollar in their pocket. These are hard-earned dollars. Their blood, sweat, and tears are going into building their business, and we want to help them keep every dollar in their pocket that they are able to. So yes, let's make a movement of this. Absolutely.
Which brings up one last disqualifier. Probably this is not right for you if you feel like you're not paying enough taxes. If you feel like the federal government should have more of your money, then this is probably not right for you.
If you're not interested in keeping your money in your pocket by any means, don't reach out to me.
There's probably, you're not right for each other if you feel like you're looking for opportunities to pay more taxes. Great stuff, Justin. I really appreciate it.
And it is a pleasure being with you. Thank you for this opportunity.
Absolutely. Hey guys, it's Todd here again. I hope you enjoyed that episode. Be sure to check out the show notes for more details. And if you get value from this podcast, would you do me a favor? Please leave a rating and a review on either Apple Podcasts or Spotify or whatever you're listening to this on. And if you're watching on YouTube, please like, comment, maybe even subscribe on YouTube. And if you own a construction business and you feel stuck, or you feel like you're spending too much time in day-to-day firefighting, dealing with all of the problems in the business, if you feel like everything is stuck in your head and maybe you don't have the time or the bandwidth or the energy to work on your business because you feel like you're stuck working in it, if you want your business to run without you so that you can take a vacation or be able to sell your business one day, if you want the business to simply survive if something happens to you, then there are 3 crucial systems that you need to have in place. First, you need to design your business for the future. That means establishing the major functions of your business and the results that each function is accountable for. This is the foundation of every successful business, period. And the best way to do that is to design your accountability chart. Second, you need to design and document your process to what we call nail the handoff from the office to the field. This is a very disciplined and, very importantly, documented process that maps out every step of the pre-construction process. It's very important that you have a pre-construction process. This is where projects are made or lost. This will eliminate the majority of the chaos on your job sites, and you'll also learn the secret sauce for getting your team to actually implement a process. That's very important. Third is implement the leadership systems that your team will use to convert your goals and objectives into reality. Somebody needs to be planning tomorrow's work today. Someone needs to be doing 2-week look-ahead schedules. Someone needs to be establishing the most important things for the next 6 to 8 weeks for the business. And there needs to be a good, solid weekly team meeting. These are your leadership systems. So there are 3 crucial systems: designing your organization for the future, nailing the handoff, and leadership systems. So you can certainly figure all of these out on your own through trial and error. You could spend months, maybe even years experimenting. You could try things out, see if it works. Meanwhile, dealing with the chaos and the profit bleeds and the schedule overruns that come along with that. However, if you want to accelerate your results and avoid months or years of learning curve and mistakes, then one of the best things you can do is to find a proven system and use it. That's the same reason that you use QuickBooks or CoConstruct or Buildertrend or Procore instead of writing your own software. Yeah, you could probably do that. You could probably create your own software. You could spend years and tens of thousands of dollars, maybe hundreds of thousands of dollars figuring it out, spending all the time, all the money, making lots of mistakes. But why spend a lot of time and energy reinventing the wheel when you can just take advantage of the years of work someone else has already done? And that's why most successful CEOs invest in coaching. Coaching brings three things. Number one, that proven system. Number two, new ideas. And number three, which is very important, accountability. A proven system, new ideas, and accountability. You get access to a proven system that you can just plug into your business without spending years trying to figure it out on your own. New ideas. You'll have access to a team of coaches who work with construction business owners from all over the world, and they'll share ideas and best practices that you simply may not have been exposed to. And let's face it, when you're the boss, nobody's looking over your shoulder. That's why you need layers of accountability to drive implementation. And if you can do all of that inside a community of other construction business owners, that's even better. And that's what an investment in coaching will do for you. So here's my advice. Find the best coaching program out there that has a proven system that's a good fit for you, and then invest what it takes to work with them. If you'd like our help putting those crucial systems in place in your business, the accountability chart, nailing the handoff, and leadership systems so that your business can run without you, then here's the next step. Simply go to constructionleadingedge.com/apply, APPLY, and schedule a breakthrough session with our team and see if you're a good fit. If you are a good fit, we'll discuss our Systematize Your Construction Business program. That's constructionleadingedge.com/apply. Thanks so much for listening. I will see you next time.